The inverse head and shoulders pattern. What's going on, guys? So in this video, we're gonna be talking about this pattern, how to utilize this pattern, and how to actually go about building out your trading plans and trading this pattern for pretty much any given stock, any given chart that you want to trade. Once we get down into it, it's actually quite a simple pattern that you can start to identify once you've seen this a couple times, and as we start to get more familiar, you'll start to identify this and you'll start seeing this more and more and more. And then it allows you to really identify your risk and then trade that risk, right? Trade that plan based on that risk. At the end of the day, when it comes down to it, if you're trading based off technicals, so you're trading based off of a chart, based off of momentum, based off price action, we're not trying to predict the future all the time. And we know we can't do that, okay? We ultimately can't predict the future all the time. We're not gonna be 100% accurate all the time. But what we can do is manage our risk in a way that we can be profitable more often than not, or even if we're not profitable more often than not, we could make more than we lose so that we ultimately in the long run could make more money than we lose week to week, month to month, year to year, which will stack up very, very nicely. And ultimately, the goal is to beat the overall market. So that's what we're going to be talking about here in this video. So really quick, what is the inverse head and shoulders pattern? Now, this is essentially the exact opposite of the head and shoulders pattern. So if you want to go back and check out our video on the head and shoulders pattern, I'd highly recommend you do so. But once you have a feel for one of them, the other one will come pretty naturally and pretty quick. So this one should be a shorter video than the last video we did. So hope we can kind of run through things and then take us step by step through building out that trading plan and ultimately, right, how to trade this, right? How to risk this play, how to play it, okay? So inverse head and shoulders, okay? It's the head and shoulders bottom. So essentially, a picture, speaks enough, at least to me. So obviously you can read this little, paragraph right here, but the picture at the bottom of our screen is really, really useful. So just like a head and shoulders, there's a neckline, okay? We have a left shoulder, we got a right shoulder, and then we have an inverse head. So if you're looking at me, right shoulder, shoulder, head. Now in this case, you flip it upside down and you can kind of come to this sort of pattern right here. So let me zoom in. So, you have your left shoulder, you have a dip, you have a pushback up to a level. The neckline does not have to be established just yet, but it pushes up, then it comes back down. It goes lower. We have a lower low than the recent low. So let's just say, right, if you look at the screen, cut it in half and say, hey, what comes after the head hasn't happened yet. We now put in a lower low. We start to bottom out and we start to reverse. Okay, cool. We come back up. Guess where we get rejected? We get rejected at relatively the same level that we got rejected after the bounce off the left shoulder. Then we come back down, put in a higher low relative to this head bottom, this lower low compared to the other shoulder. So this is now a higher low, and it doesn't have to always be the exact same depth on the chart compared to this other shoulder. It could be a little bit higher up, it could be a little bit lower. The key is it doesn't go below the head, okay? And then from there, when you break above this neckline where we got rejected a couple times, that is the breakout, and that's for the bigger move up. So the inverse head and shoulders is actually a bullish pattern, okay? So we're looking for a breakout over the neckline for a move up. And we'll talk about how to trade this and how to play this. There's a couple ways you can do it. You may think to yourself, only play the breakout, but then if you're like me, you're like, well, why would I want to risk something at the breakout level when I could potentially look to play this thing a bit earlier and just risk that shoulder, right? Risk the bottom of that shoulder and anticipate the breakout before it happens. It could be seen as riskier, but at the same time, right, it comes down to how you manage your risk and your trading plan, ultimately. Another key is gonna be that volume indicator right here. So when we get that breakout, you wanna see an increase or an influx in volume coming through, which should be, higher, relatively speaking, than the past couple of periods in terms of these past moves up and down. This volume on that breakout should be more substantial, which indicates some serious pressure and some serious buyers coming in, shorts being squeezed out potentially, and a bigger move is coming. So some takeaways from Investopedia here. What this can be signaled as is essentially a bull market, right? So going out or coming out of a bear market into a bull market. So you'll generally see this pattern actually take place. And there's actually a lot of stocks out there right now, which we can go ahead and look at. We'll look at a few. And there are a lot of stocks setting up in this pattern right now when we're filming this video in the market, because we just had about a 2.5 month span of time where stocks just took some pretty big hits. So you kind of have a bear market, as if you will, or a correction or a pullback, and that bottom being put in for a bigger move up. Now this can obviously happen on larger time frames, month to month, week to week, or it can happen hour by hour, or it can happen in the 1-day chart and the 1-minute chart, right? So this can happen really across any time frame. It really comes down to how you see it, how you chart it, and then how you establish your levels and your risk levels and your profit targets, and make sure that you have a trade that makes sense to you, that offers really good risk reward, and that you can replicate over and over and over. And so if it's working for you, maybe this is the only pattern you trade, right? And this is all you trade, and you know, this is my pattern. I love this pattern. I look for this pattern. And if I don't see it, I size down, or I don't bother trading, and it's just not worth my time. So let's now go through how to trade this pattern. We first need to now identify it, okay? So if you don't see it or you don't know where to go, the best place to go is finviz.com, okay? Here's finviz.com, and we'll dive in a little bit deeper here in just one second. But first, I do want to mention that when it comes to this, having a watch list of stocks, honestly, that's the best place to be, because you're going to already know these stocks. You'll have seen these stocks day to day, week to week, whenever you look at them, and you kind of got a feel for them, and you kind of have a feel for, oh, these are relatively stronger than these, or this stock has shown some relative weakness to this one, or this one's shown some relative strength. So you kind of have a better feel for the movements, whether you kind of realize it or not. Subconsciously, you've been watching them, you see them, and so that's always a great place to start. But if you don't have a place to start, or you're not seeing this pattern pop up, but you want to try it, or you want to start looking at this pattern, finviz.com, we go to the screener tab, and then from here we go to signal up at the top, and we go to the bottom of our drop down, and go to head and shoulders inverse. So it's right under head and shoulders, and just like that, we have 20 stocks. In this case, there's a lot more stocks that are showing head and shoulders patterns right now compared to inverse head and shoulders, but it's of course, it's an algorithm, right? It's a computer. It's not perfect, right? They're going to essentially find these stocks based on how they see things, and you might see things a bit differently. So again, you can play this pattern. It comes down to how you see it, how you want to play it, how you want to risk it. It doesn't have to be, oh, it's not on Finviz, I can't trade it. Obviously, there's other ways to do this. Okay, so a couple things. This will give us a list of stocks, and what I'm going to do is, we can just hover over some of these and go one by one down this list. And one of the ones I'll use as an example here is, let's just say JKHY, Jack Henry Associates. And boom, here you go. Here's the chart. So Finviz gives us a left shoulder right here. We have our head right here, our inverse head, and then our right shoulder right here. So again, what happens here is this stock kind of gets stuffed up around this 175 zone throughout end of July, August into September, pulls back down towards 161, pushes back up towards that 175, gets stuffed, can't break it, gets rejected there. So that's now starting to become an interesting area, a potential neckline. If it then confirms again, we come down even lower than those lows back here in December into early January, down towards under 150. We pop right back up. Guess what? We got rejected here at that 175 again, and we came right back down. But guess what? This time we established a higher low. We didn't go below 150, and we built a higher low here at 157 or so. Got pushed back up, got stuffed at the neckline once, came back, kind of consolidating, and then eventually broke above, came back, tested the neckline as now prior resistance becoming support, and continuing higher. You love a chart like this. You love it. Now, Jack Henry Associates, who even knows what this company is? I know I don't. I've never heard of them until today. But it's like, there's so many stocks. It's kind of funny. There's so many stocks out there that, just kind of do their own thing and have their own moves. And, despite the past, since 2022, the market's actually been pretty nasty for a lot of NASDAQ stocks and a lot of just stocks in general. But this stock has been resilient, and look at this thing. It's hitting new highs, or at least on this span that we're looking at. A beautiful move, and respecting levels, respecting technical analysis, just absolutely setting up perfectly. Now, obviously, this one's played out. So, right, okay, is this a perfect stock to play now? Probably not. It's already made a big move, and, it's made a nice extension. I don't personally, have an interest in trading this thing right now. Maybe, short if anything, but honestly, why am I going to short just randomly into a move up? So that is an example of how this works. And now you have a place to go to kind of see how this works and to find some ideas. But let's talk about a couple other ones. I think I have two stocks I want to pull up and show you guys at least what I'm seeing right now and how you can play this and risk off these levels. And we'll talk risk reward. We'll talk how much you're going to risk down, how much you're going to risk up, profit targets, all that good stuff. All right, guys, so now we're inside my Webull platform. And of course, we'll leave a link down below if you want to sign up to Webull, get some free stocks in the process, or just follow along with us here. So here's Webull. And what I think is really interesting about this is that we are looking at Roblox. So now we're looking at a stock that I think a lot of us are, at least somewhat familiar with. It's been in the news lately, it IPO'd last year. So you kind of have a feel potentially for this potential stock. And what we see right here is a gap on the chart. So we had a gap down on earnings, which is very, very nice because it offers some nice targets. And so I have a target up here towards this $65 area to fill that gap. Now, what are we seeing on Roblox? I mean, right now, this stock obviously went on a couple month span of a decline. And now it's trying to potentially reverse. And so we're at that point in time where this inverse head and shoulder setup could actually signal a potential reversal. And let's talk about it, and let's talk about our levels to watch. So right now, what are we seeing? I have a line right here at this 53.60 or so area. Why is that interesting? Well, that potentially could be our neckline. And why is that? Well, what I'm seeing right here is a left shoulder right here. Okay, we came down even lower, established that inverse head down here. And then what I'm seeing is that we pushed up towards that neckline, the same exact spot we got rejected at on this bounce off the left shoulder. Pushed up there, have been getting rejected so far. So right now, you're looking at a possible right shoulder developing right here. And maybe we actually in the coming days and weeks come down a bit more. And so that could be, potentially a better level to risk off of for the right shoulder. But for what I'm seeing right now, on a smaller, I guess, shorter time frame over the past month and a half, this is setting up to be a really nice play. So what I'm looking for now is a break up over this 53.60 area for a move up towards 60 to 65 is my targets. And now it's quite simple. From where the stock is at right now, how am I going to play it? Let me zoom in a touch more, and now let's get our trend line here. From where the stock is right now, my risk is the bottom of this shoulder, so roughly 45.50 or so. So it's a 12% risk. My reward is up here towards this first target is like $60, which is about a 16% reward. And the next target is 65, which is about 26%. So in this case, guys, we're risking roughly 12% to make 16 and then to make 27. So take the average of the two, risking 12 to make 23, 24, something along those lines, right? This could be a really, really good trade, and it offers more reward than our risk. Obviously, the stock's up today, so maybe I would have liked to buy this on a pullback day, or I want Roblox to push up. I want it to break out over this neckline, okay? So Roblox pushes up, maybe it goes up here towards like $57, okay, cool. Then I want Roblox to come back, test the neckline, hold it as support. That's where I'll take my entry, and I'm looking for an extension like this. That could be a valid idea as well. So you can play it a couple different ways. There's no one way to trade it, but if you're looking for a move, maybe this type of breakout move, pullback, retest, if it holds as support, I'm going to enter, and my risk is going to be pretty tight below this neckline. So for example, let's say it comes back down, test 53, pops back up, and it's at 55. I'm in at 55. I'm risking down to 53, which is the neckline, and I'm looking for a move to 60 to 65. So I'm looking for $5 to $10 profit with a risk of $2. That's a really nice risk reward, and that's how I'm letting things play out. So of course, a couple ways to play it. You could play options on this too. You can play just shares. This is a stock that honestly offers some nice movement. So shares is probably fine, to be honest, at least how I see it. So that's one idea, and that's something that at least I'm watching right now going forward. I'm not currently in this position, but I'm looking at potentially looking for a break over that neckline, a retest, and that could be a better entry point, at least for me, if I'm looking to take this type of trade. Okay, so that's an idea. The next one here is Affirm. Honestly, a similar type of look here, not the exact same, but it's kind of showing us, the similar chart pattern setting up. So you kind of have right here a left shoulder being put in, you have the head right here, and then you don't really have too much of a dip, but you kind of have what looks to be a possible dip right here. So in this case, it's a little bit more wonky, and every chart is going to be a little bit different. It's not going to be perfect. That's just me establishing, okay, here's what I'm seeing, here are the levels, and now I had a line here at $47. That happened to be an area of support back here. If I scroll all the way back to the left, it also had me an area of support back in May. So that area is pretty crucial to me, and I can line that up as being, area that looks relatively nice in terms of the neckline. Now, just like that, I'm looking at this stock. I don't want to see the stock dropping below $40. It's sitting at 49, and maybe my target is up here towards $90. So again, if I'm taking this trade right now, I'm going to risk it down to here, down to $40, which is an 18% risk. This is a much more volatile stock, or at least a little more volatile stock. 18% risk, but I'm looking for an 80% reward. That's a really nice trade as well. And you can also make sure you move your stop losses up along the way. So if the trade starts going green, move your stop loss up so that you don't end up taking a big loss. And I don't like to use hard stop losses, but what I do like to do is set alerts. So for example, on this stock, if I'm in Affirm right now and my stop loss was here at $40, maybe my stop loss is now here at 45. So I'm going to minimize the downside risk on this. And all I'm going to do is go on my platform. I'm going to just control click and go create alert. I'm going to type in the price point. You know, if a firm comes back below 45 bucks, then I want to get alerted, and it'll alert me, and I can come back and check on it. And if I've got to cut it, I got to cut it. If I got to, if I want to stay in, I stay in. But now at least it's back on my radar if I haven't been watching, or I don't want to get stopped out on a quick, wick down. There's some news for the market. The market kind of freaks out for a second, and we drop down, and all of a sudden I get stopped out, only for the stock to bounce right back. So that's kind of why I don't like to use hard stops. But that's personally just at least how I like to do it. You don't have to do it that way. That's just at least how I do it. Then taking it a step further, obviously journaling your trades. It could sound stupid, and I know people don't want to do this type of stuff, but hey, logging your trades, saying, hey, this one worked. Here's what I did. This one didn't work. Here's what I did. You're going to learn a lot from those. And if you notice that, hey, these inverse head and shoulders are really, I have a 70% win rate over the past, 2 months playing these on, day trades or on swing trades, or, over the past year, I took, 10 inverse head and shoulders pattern setups, and I, made money on 7 of them, and I lost, on 3 of them, and the losses were smaller than the wins. That's a profitable pattern for me. I want to make sure when I see that again the next year or going forward, I want to make sure I'm taking those, and I want to make sure that I'm, playing them the same way I've been playing them. And it's a great way to kind of learn about yourself as a trader, and also learn about, what works for you and what's working, at least in certain market conditions. We'll leave a technical analysis course in the video description if you guys want to learn more about technical analysis, learn a little bit more about charting trend lines, support resistance, all that good stuff. We also have some more videos in that course and bonuses on fundamentals, market psychology, market cycles, all that good stuff. We partnered up with Joseph Hogue from Let's Talk Money. That's a great resource if you're interested in the video description and pinned comment. Other than that, thanks so much for watching. Go back and check out some other videos. We got tons of videos here, some great playlists if you guys want to learn different strategies, how to use different platforms, different brokers. Finviz, we got some videos on. So there's a lot of resources here, all for free on the channel. So definitely take advantage of those. Happy to see you guys in the future video. If you got something out of the video, consider sharing it. Make sure you're subscribed, and I'll see you guys in the next one. Peace.